What will happen if you are diagnosed with cancer, had a heart attack, or suffered a stroke tomorrow? Most of us assume our healthcare system got us covered, and yes, it does for the medical side. But what about your mortgage, your groceries, your kids' activities? That gap. That's the gap I didn't fully understand until I started looking into critical illness insurance. And what I found honestly surprised me. Let me break it all down. So, critical illness insurance is actually pretty straightforward. You pay a monthly premium, and if you're ever diagnosed with one of the serious conditions your policy covers, you get a one-time tax-free lump sum. We are talking about conditions like life-threatening cancer, heart attack, stroke, kidney failure, multiple sclerosis. Most food policies in Canada cover around 25 to 27 conditions. And here is the key thing. You can use that money however you want. You can pay your mortgages, cover income loss, fly somewhere for treatment, hire help around the house. There are no rules on how you spend it. The payout typically ranges from $25,000 to $100,000 or more depending on the coverage you choose. So now you might be thinking, we live in Canada and we have universal health care, so why would I need this? Here is what the numbers say. About 1 in 2 Canadians will be diagnosed with cancer in their lifetime. Heart disease is second leading cause of death in Canada, and roughly 62,000 Canadians experience a new stroke every year. Our healthcare covers the medical side, the surgeries, the treatments, the hospital stays, but it doesn't cover your bills while you recover. So, if you are off work for 6 months or a year or longer, that income loss doesn't just disappear. That's the gap critical illness insurance is designed to fill. It's not replacing the healthcare, it's protecting your finances while healthcare takes care of your body. Now let's talk money, because that's usually the first question people ask me. Premiums for critical illness insurance in Canada typically ranges from about $25 to $100 per month, depending on your age, health, coverage amount, and the number of conditions covered. Younger and healthier, you will pay less, and that's actually a very important point. The costs go up significantly as you age. Premiums can roughly double every 10 years, so getting coverage at 30 is dramatically cheaper than waiting until you're 50. Now, there are 2 main types of policies. Term policies cover you for a set number of years, say 10 or 20 years, and they are affordable. On the other hand, permanent policies cover you for life, but the premiums are usually higher. Here's one thing a lot of people don't know about: the return of premium options. Some policies let you add this feature, which means if you never make a claim during your policy term, you will get all your premiums back, essentially getting coverage for free if you stay healthy. This option does cost more upfront, so it's worth doing the math, but is a feature that makes critical illness insurance pretty unique. So, who should actually consider this? If you're the primary income earner in your family, this is worth a serious look. If you have a mortgage, debt, or financial responsibility that doesn't pause when you get sick, same thing for you. And if you're self-employed or a freelancer without employer benefits, you're especially exposed if there is no employer disability plan backing you up. Now, who might not need it? If you already have a strong emergency fund covering 6 to 12 months of expenses, robust disability insurance, and no major debts, you might be comfortable without it. Or if you are in a later stage of life with minimal financial obligations, the premiums might not make sense. But here is what I will say. Most working Canadians with a family are underinsured for this kind of event. We plan for retirement, we plan for our kids' education. We don't always plan for what happens if we get seriously sick in the middle of all that. Before you go out and get a policy, here are a few things you need to know. First, survival period. Most policies require you to survive at least 30 days after your diagnosis before they pay out. This is standard across industry, but is important for you to know upfront. Second thing you need to know is that there are strict definitions. Not every diagnosis qualifies. Not all cancers trigger a payout. Early stage or non-life-threatening cancers may be excluded. Heart attacks have to meet a specific severity level, so read the fine print, or better yet, have someone walk you through it. The third thing you need to know is pre-existing conditions. If you already have been diagnosed with something, it will likely be excluded from your coverage. That's why getting covered while you're healthy is so important. And the fourth thing you need to know is that don't just compare prices. Compare the number of conditions covered, the definition used, and whether the policy includes that return of premium option. The cheapest policy isn't always the best one. So, is critical illness insurance worth it? After everything I looked into, I would say for most Canadians with financial responsibility, is one of those things you hope you never need, but you will be incredibly grateful to have it. The key is to look into it while you are young and healthy, because that's when it's most affordable and easy to qualify. I'm not here to sell you anything, just to make sure you have the information to make a smart decision for your family. If this helps you see things more clearly, hit the subscribe button. I put out new videos every week breaking down financial topics that actually matter to Canadians. And drop a comment below. Have you ever looked into critical illness insurance? I'd love to hear where you are at. This is Financial Clarity with Happiness. See you in my next video.